1668 Sweden. The country is in financial disarray. King Charles XI of Sweden, adorned in his regal robes, stands before his advisors. Year of foreign wars had emptied the royal coffers, and the value of Sweden's currency is plummeting faster than autumn leaves in the wind. People panic as banks fail one after another. Chaos looms over the land, and something has to be done to turn the tide. Amidst the shadows of a kingdom on the brink of uncertainty, there emerged a man whose ink-stained hands held the power to rewrite fate itself. A beacon of remarkable insight and unyielding determination strode into the grand stage of history. His daring proposal, a radical concept that could reshape the destiny of the realm, awaited an audience with the king. His name was Johann Palmstruck, and as he stood before the throne, a hushed tension filled the grand chamber. All eyes were fixed upon the man who held within him the power to alter the course of the kingdom's future. Twelfth century Venice. In the 12th century, Venice had already established itself as a major trading hub, connecting the east and west through its vast merchant fleets. As trade flourished, so did the need for secure financial services. Money changers and lenders operated in the city, facilitating transactions and providing loans to merchants and traders. Among these financial establishments, the money changers' benches, known as banco in Italian, held particular significance. These bancos provided critical financial services and became the foundation for what we now recognize as modern banks. The term bank originated from the Italian word banco, signifying the historical roots of the banking system and its evolution from the bustling streets of medieval Venice. However, money changers and lenders faced several challenges and limitations, such as the risk of theft, fraud, and the difficulty of expanding their business beyond local markets. These factors created a demand for more sophisticated and efficient financial institutions that could offer a wider range of services and products, such as deposits, loans, bills of exchange, letters of credit, and insurance. Among the first to respond to this demand were the Medici, Bardi, and Peruzzi families, who founded some of the earliest and most influential banks in Europe. They established branches in major European cities such as Florence, Genoa, Rome, London, Paris, Bruges, and Barcelona. They used their banking activities to finance their trade operations, as well as to serve the needs of other merchants, nobles, and rulers. The development of banking spread from northern Italy throughout the Holy Roman Empire, and in the 15th and 16th centuries to northern Europe. However, this banking system was not without its risks and challenges. The banking system was fragmented, meaning each bank was issuing its own currency that was backed by gold or silver reserves. There were many different types of banknotes in circulation, each with a different value and quality. This created problems for trade and commerce, as people had to exchange their banknotes for coins or other banknotes at different rates and fees. Moreover, the banks were vulnerable to economic shocks such as famines, plagues, or inflation. They operated under a fractional reserve system, which means they kept only a fraction of their deposits as cash reserves and lent out the rest to earn interest. This boosted money and credit in the economy, but it also exposed them to the risk of not having enough cash to meet the demands for withdrawals. Without a central authority to regulate them, banks decided their own reserve ratios, which often left them short of cash during crises. When people feared their bank might fail or run out of money, they withdrew their deposits en masse, causing a bank run. Even if a bank was fundamentally sound and not at risk of insolvency, a bank run could quickly turn it into a failing institution. Moreover, a bank run on one bank would usually trigger a chain reaction, affecting other banks in the entire financial system, creating widespread instability and chaos. For example, in 1345, King Edward III of England failed to repay his debts to the Bardi and Peruzzi banks, which had financed his wars. This caused a panic among their depositors, who rushed to withdraw their money. The banks collapsed, triggering a financial crisis that affected other banks and spread across Europe. The crisis also sparked social and political unrest in Italy. Another example is the case of Stockholm Banco, which was founded by Johann Palmstruck, the same visionary we mentioned at the beginning of this video. It was the first bank in Europe to issue paper money, but it also issued more money than it had copper coins to back them up. This caused inflation and distrust among the public, who demanded to exchange their paper money for copper coins. However, the bank could not meet the demand and had to suspend payments in 1664. This caused a panic among its depositors and creditors, who lost their money and assets. The Swedish government took over the bank and sentenced Palmstruct to death, but later pardoned him. Now he stands in front of the king and advocates for an idea that would later become the concept of the central bank. He argues that a bank that is controlled by the state and has the exclusive right to issue paper money can solve the problems of the fragmented and unstable banking system. He explained that a central bank can regulate the supply and value of money, maintain a fixed exchange rate between paper money and copper coins, and provide loans and deposits to other banks and customers. He also claims that a central bank can act as a lender of last resort, which means that it can provide emergency liquidity and credit to the banking system in times of crisis, preventing bank runs and financial instability. Palmstruct's idea is visionary and innovative, but it's also controversial and risky. The king is intrigued by his proposal, but he's also wary of its implications and consequences. He consults with his advisors and experts, who have mixed opinions on the matter. He wonders if Palmstruct's idea is feasible and beneficial, or if it's too radical and dangerous. He has to make a decision that will shape the future of banking and finance in Sweden and the world.